Good afternoon. This is Mark Espy with MarketTamer.com. I am also known as the Robinhood Trader, and we find ourselves here on Friday afternoon, the 14th of May, and we're looking at the Dow Jones Industrial Average. Before we begin, I must remind everybody that everything we speak about today is for educational purposes only and not to be construed as a recommendation to buy or sell anything. You will probably remember from past commentary that we were in this channel and I indicated that a breakdown out of the channel was likely, and it did happen. It broke down and closed below the channel on significant volume, and the next day was a spinning top, a very narrow range trading day, also on big volume, just prior to the flash crash day that we had on Thursday the 6th of May. I indicate the level to where it spiked, which was commensurate with the low in February. But I must tell you that I am not impressed in terms of the credibility of the move. I think it was a fake move. It was a fundamental thing. It was nothing that was technically related. And so I'm going to have a tendency to disregard this move all the way down here. Although I do believe the February low certainly is a low to be recognized, but this spike down here I don't think had much credibility. Now, the following day, I do believe we need to pay attention to the spike low and where the shadow on this candle went, which was about 10,200 and change. And there is some market symmetry on that. As you can see here, there was a swing low that occurred here in late February. Also, the low of the channel that was put in December. And so I think this is recognizable. We should pay attention to that, and it should be a credible level of support. So what happened from there was the recovery day that we had on Monday, big up day, went sideways a little bit and appeared to be going into a bull flag, and then came back down. All of these days were fairly large trading days. And we've been looking at a lot of triple-digit days in the Dow lately, and that shows a lot of uncertainty and I think probably continuing fear. Also with the thought in mind that the VIX has just recently spiked back up above 30. I believe it closed at 31.24. And so we need to be aware of the fact there are people piling in and buying puts and fearful of the move down. So in my estimation, we're in a channel right now. It's a fairly wide channel, and we may begin to narrow it going forward here. But right now, I think we need to recognize 10,234 in that neighborhood as the low of the channel, and the upper range of the channel being the low of the prior channel, or at least this little shelf here that's about 10,800. In the meantime, I'm just going to follow it and watch it move within this range until it decides what it wants to do. It may stay here for a while trading in this range because it's a fairly wide range. As I had mentioned in prior commentary, we have a swing high here. We have this channel back here in December that needs to be recognized as well. We have a, looks like the stochastics is turning over a bit, so that needs to be recognized, and the MACD is in the south side of the zero line. So let's just watch this for now. Hard to say where it's going to go, but let's just let it trade where it's going to be. And again, it may be that we find a tighter range going forward here, and we might begin to back off of the triple-digit trading days moving forward. With that, we're going to go ahead and take a look at the SPX.